Well, I think what's going on is we had a momentum market for a long time, and I think we're getting back to a value-based market, which is a reversion to a mean concept. So these stocks that have been such great overperformers for the year are now starting to underperform, and that's going to pull down markets.
Laura, how much of the China-U.S. trade concern impacts this sector? Obviously, a company like Apple with the supply chain is in focus, and frankly, some articles out there speculating whether American tech executives might be arrested in China, as a result of the arrest of the Huawei CFO in Vancouver. Do companies like Apple need to be worried about that? And if so, what does Netflix have to do with anything?
So I think what's going on is we're getting a lot of these stocks, especially if they don't make money like Roku and Netflix, where they actually don't have profitability at the bottom line, trade like long-duration bonds. So as risk goes up and we all take our weighted average cost of capital discounting up, all of those stocks get hurt worse compared to companies like Apple and Google. But I will tell you that Facebook and Google depend on advertising, which is absolutely dependent on global growth. Anything that raises tariffs hurts global growth. To your point about China, anything that closes off the Chinese market not only hurts Apple, but really hurts the global demand curve for basically most of America, right? So I think that's what's going on in markets. My best performing stocks today are the Walt Disney Company and Viacom and CBS, companies with huge free cash flow near term and sort of predominantly U.S. domicile.
So when you take a look at some of these other companies, Laura, I mean, if we are moving into, or if we have moved into the sort of value investing themed market, I mean, can you be a bull still on Netflix? I mean, is that possible?
No, you cannot. You cannot be a bull on Netflix. For one thing, Netflix must access capital markets to stay solvent. They will lose $3 billion this year, so capital markets start closing and capital gets more expensive. It's bad for any company that must raise capital in the capital markets. They're losing money. No, you want to go defensive. You want to go to high free cash flow companies, don't depend on China, or maybe don't depend on the EU, depending on what you think happens with Brexit.
And so in your universe of stocks that you follow, give me the name. You mentioned a couple of them that fit that bill where you want to go with high cash flow, domestic focus, et cetera.
Yeah, so that would be like Disney, Fox, Viacom, CBS. Discovery is a nice choice. They all have nice big free cash flow, predominantly U.S. and U.S. revenue streams.